All right, so let's dive right in. Today, we're looking at National Standard India Limited.
Okay.
Specifically, their Q3 FY25 results. You sent over some really, really interesting stuff.
Right.
We've got the official financial reports, right, from the company themselves. So we've got the unaudited results. We've also got the auditor's review in here. And
Yeah.
you even sent a bunch of questions that you had about National Standard India Limited.
Yeah.
So specifically about their performance and sort of what challenges they might be facing and maybe what the future holds for them.
Exactly.
And looking at these reports, I think there's a lot to uncover here.
Oh, yeah.
I have a feeling this is going to be an interesting deep dive.
Absolutely. Financial reports, I mean, they can be pretty dense,
Yeah.
but they can really tell you a lot more than just the bottom line.
Yeah.
You can get a sense of a company's strategy just by digging into those reports, how much risk they're willing to take, how they're responding to all the changes that are happening, in the market.
Okay, well, let's jump into it then. Let's take a look at those Q3 FY25 results.
All right.
So they reported a revenue from operations of 1,569.45 lakhs. Their total income was 1,984.29 lakhs.
Okay.
And they posted a profit of over 115.35 lakhs. So not bad, right?
Not bad at all.
At first glance, it looks pretty good.
But I'm sure we need to dig a little deeper, like always.
Of course, of
For
course.
example, let's compare that to their previous quarter.
Yeah, okay.
So the quarter ending September 30th, 2024, their total income was actually a lot lower.
Really?
Yeah, it was 817.03 lakhs. That's a pretty big jump, right?
Yeah.
From the previous quarter to this one. So the real question is, what happened? What made that growth happen so suddenly?
Yeah, that's a great question. I mean, was it a one-time thing?
Right.
Or is this something that, we could see continuing? Is this like a sustained upward trend?
Well, just off the top of my head, I'd say it's probably tied to a big project. Maybe they completed a major project.
Oh, okay.
Remember that National Standard is primarily in the real estate development sector.
Right.
So these, large revenue recognitions, that can happen in chunks like that. It's not uncommon.
Yeah. Okay.
But that also makes me think about something else. They've got a lot of debt financing going on.
Uh-huh.
You can see that, in the high finance costs this quarter, 110.61 lakhs.
Right.
So they're basically taking on a lot of debt to fuel this growth, right?
Yeah.
But what happens if the real estate market slows down? That's something to think about. It's a risky move for sure.
So you're saying they're kind of going for this like high risk, high reward approach.
Yeah, exactly. And I know you had some questions about their profit margins too,
I
right?
did, yeah.
Well, to really get a grasp on those margins, we can't just look at a single point in time. We need to see how they've been changing over time. Have they been getting more efficient? Are rising costs eating into their profitability?
Yeah. Okay, let's take a look at that then.
Right.
Let's pull up their statement of unaudited financial results. And you know what? Something's jumping out at me here.
What's that?
The employee benefits expense. It's pretty low.
Yeah.
Just 1.69 lakhs for the whole quarter.
Uh,
So what does that tell us? Do they just have like a tiny workforce?
it could mean that.
Or are they relying a lot on contractors instead of hiring full-time employees?
It's possible. Or it might just be some aggressive cost-cutting measures,
Yeah.
It's hard to say for sure without knowing more about how they're structured, but it's definitely worth paying attention to.
Okay.
Especially with their merger with Macrotech Developers Limited coming up.
Oh, right. That was big news back in July of 2024. I have to admit, I'm really curious about, what that merger is going to mean for them.
Yeah, I mean, mergers are rarely, just about two companies coming together.
Right.
They usually signal, some kind of big change in strategy, like they're trying to do something they couldn't do on their own. So maybe it's about making things more efficient, consolidating resources, or maybe even trying to, get into some new markets.
So you're saying our listeners should be keeping a really close eye on this merger?
Oh, yeah, absolutely. I mean, it could completely change, National Standard's future. We don't know yet.
It's like they're starting a whole new chapter.
Right.
And speaking of big changes, they also applied for voluntary delisting from the Calcutta Stock Exchange.
Yeah, they did. They said it was because of inactivity. So they're still listed on the Bombay Stock Exchange, of course.
Yeah.
Which is, much bigger, much more active.
Right.
But this move, it could limit who can invest in them.
Right.
It might make it a little harder for some new shareholders to to buy their stock.
So it's not necessarily a bad sign,
Right.
but it's definitely something to keep in mind. And there's one more thing that happened that I think we should talk about before we move on.
Okay.
The company appointed a new company secretary and compliance officer, a Mr. Hitesh Marthak.
Oh, yeah, I was just about to bring him up.
His resume is pretty impressive. He's worked at some big companies, Adani Cement, Lodha Group, Reliance Communication Limited. But you know what I find really interesting? The timing of this appointment. Like, why bring him in right before a merger?
Exactly. It seems like they're really focused on, corporate governance, making sure everything's, by the book, especially with someone like, Mr. Marthak, who has that kind of background.
So maybe they're like preparing for more scrutiny, or maybe they're just trying to, be more transparent and well-governed, after the merger is complete.
Yeah, I mean, what does that tell us about their plans for the future?
Right. What are they thinking long term?
Are they trying to, you know, make investors feel more confident about this merger? Or, are they trying to grow in a specific way that, requires, stricter regulations and compliance?
Yeah, it's like they're making this very strategic move to get ready for what's next.
Absolutely.
It's like a chess game, you know?
It is. It
Yeah.
really is. You got to think a few steps ahead.
All right. Well, let's pause here for now.
Okay.
But we're just getting started.
We are.
When we come back, we're going to take a look at national standards history and see if their past can give us any clues about where they're headed in the future. So stay tuned.
All right.
Okay, so before we got sidetracked by that merger and the new guy they brought in, we were talking about how well National Standard did in Q3, especially that big jump in revenue. But, one quarter doesn't really give you the whole picture.
Right, exactly. It's like you need to see the bigger trends, right?
Exactly. To really understand where they're headed, we got to look at, how they've been performing over time.
All right, so let's do that. Let's compare this recent performance with, the same time last year.
Okay.
All right, so for the 9 months that ended December 31st, 2024, their total income was 3,264.93 lakhs.
Oh.
Now, a year before that, so for the 9 months ending in December 2023, that number was 2,806.17 lakhs.
So we're seeing an upward trend.
Yeah, that's a pretty significant increase. So they're doing well. They're on a roll, right?
Yeah.
But wait a second. Didn't their Q3 results from last year tell a different story?
You're right. You caught that. Their Q3 FY24 income was actually 1,881.55 lakhs.
Huh.
So that actually means that their income for Q3 of FY25 is actually a pretty big rebound
Oh, okay.
from how they did, during the same period last year.
So it hasn't been like all smooth sailing for them.
You're right. There have been, some ups and downs.
Yeah.
Yeah.
Makes you wonder, like, what caused that dip last year? And, is this year's growth really going to last? Yeah, it's a good question. I mean, it's totally possible that, things outside their control, like maybe the economy slowed down a bit.
Right.
Or maybe demand shifted, things like that definitely have an impact, especially on real estate.
Yeah.
So, if that's the case, then this year's rebound might mean they've figured out, how to adjust to those changes.
Right. So it shows how important it is to zoom out a little bit.
Exactly.
Not just focus on one quarter, but also look at, what's happening in the bigger picture.
The bigger picture. And speaking of the bigger picture, India's real estate sector is going through some pretty big changes right now.
Oh, right. You mentioned that earlier.
Yeah, and it's pretty interesting to see how it all plays out. You've got this rapid urbanization happening, and the government is pushing for more affordable housing, and the demographics are changing, the whole different landscape.
Yeah.
And all of that, all of those things are shaping the market in a big way.
So where does National Standard fit into all of this?
Right. Are they, riding this wave? Or are they getting, left behind?
Yeah. Are they surfing or are they sinking? Do we have any idea, how their projects, the kinds of projects they're working on and who they're targeting? Does that line up with these bigger trends?
Well, unfortunately, these financial statements don't really give us that level of detail. But it is something, to think about.
Yeah.
Right? I mean, imagine, what if they're mainly focused on building luxury homes, high-end stuff? But the real demand is actually for more affordable housing. They could be in trouble.
Right.
But on the other hand, if they've been, smart and they've anticipated these changes and they've adjusted their plans accordingly, then they could be, in a really good spot.
Yeah. So knowing like what their project portfolio looks like and who their target market is, that's really important. So we've been talking about a lot of different things that could explain their growth. Some internal factors like when they launched projects, what strategic decisions they've made,
Right.
and external factors like, what's happening with the economy and the government. It's a bit of a puzzle.
It is. It
Yeah.
is. But, when you start putting all these pieces together, the financial clues and what's going on in the market, you start to get a clearer picture.
Right. And that actually brings us back to one of your original questions
Wow.
about, what factors are contributing to their overall growth or decline. And I think we can say pretty confidently that both things are at play here.
Exactly. Internal and external forces.
Hmm.
The company's success is going to depend on how well they navigate all of that.
Yeah, it's like they're sailing in uncharted waters.
It is.
They got to keep adjusting their course to deal with, the changing winds and currents.
Right. And speaking of navigating, I know you're also curious about whether National Standard actually met their financial targets for Q3.
Oh, right, right. Yeah, I was wondering about that. But the stuff you sent me didn't have any like forecasts or projections from the company.
Yeah, that's true. We don't have any specific numbers from them,
Okay.
but we can still, see how they're doing. We can compare the revenue growth in Q3 to like industry benchmarks,
Yeah.
you know, or we can look at historical trends and see if they're meeting, exceeding, or falling short of expectations.
Right. So there are still ways to kind of gauge their progress.
Yeah.
You also asked about how they've been managing their operating costs with all the economic challenges going on.
Yes. And that brings us back to those interesting details we spotted earlier. Remember the low employee benefits expense.
Yeah.
It could mean they're really focused on keeping costs down.
Mm.
Maybe they're using more technology or outsourcing some of the work.
Okay.
And we can't forget about those finance costs.
Yeah.
Remember, they're pretty high. So they're clearly comfortable taking on debt to, make things grow faster.
It's like they're trying to walk this tightrope.
It is. Yeah,
It's trying to, keep costs low, but also keep expanding and taking advantage of opportunities.
absolutely. Which reminds me, you were also interested in their balance sheet, right?
Still was, yeah. Especially their debt and liquidity.
Right. Well, unfortunately, this report doesn't, give us a very detailed balance sheet. But those finance costs, those give us a hint about their debt levels. And while debt can be a good thing, it can help you grow faster, it also makes things riskier.
Right, especially if, interest rates go up or something unexpected happens.
Exactly. So, that's definitely something to watch, especially with that merger on the horizon,
Right.
because mergers often mean, big financial changes. And that could affect their debt, their overall financial stability.
Yeah, yeah. And speaking of the merger, it reminds me of another one of your questions. How are investors reacting to these Q3 results? And what are analysts saying about the future?
Right.
Because it'd be really helpful to know like how the market is viewing their performance and what they think is going to happen. But we don't have like access to live market data or any analyst reports for this deep dive.
Yeah, that's true. But, we can still try to, make some educated guesses.
Okay.
Like, given their strong revenue growth and, the potential of this merger, I think it's fair to say that some investors might be, cautiously optimistic.
Right.
But those finance costs and the fact that, mergers are always a bit unpredictable, well, it could make some investors hesitant.
Yeah, so it's like there's this push and pull between like positive feelings and being cautious.
Exactly. It's a classic, finance situation.
Always.
Yeah.
Which brings us to a really important point for our listener.
Okay.
While we can, sit here and analyze these numbers and make guesses, ultimately everyone needs to make their own decisions.
Absolutely. You got to weigh the risks and the rewards before you, invest anything.
Absolutely. We've covered a lot of ground here. We've gone from specific expenses to, these bigger economic trends. But I think it's time we start looking ahead now.
Yeah, agreed. Let's talk about what risks and opportunities National Standard is facing, as we head into Q4 and beyond.
Okay.
Sounds good.
Sounds good. Let's do it. Okay, so we're back. And we've talked about, how National Standard has been performing financially. And we dug into some of those interesting expenses and even, tried to figure out what that merger might mean for them. But now let's think about the future. What are the big risks and opportunities that could like really shape where they go from here as they, head into Q4 of FY25 and beyond?
Yeah, it's a really interesting time for National Standard, you know. They've got a lot of potential for growth, but they're also facing some real challenges.
Right, right.
So maybe we should start with those risks, those potential problems.
Okay, yeah. What are some of those red flags, those things that could hold them back?
Well, like we talked about before, you know, they're relying a lot on debt financing. And that can be a bit of a gamble, right?
Right.
To help them grow quickly, but it also makes them vulnerable. Like, what if interest rates go up? Or what if their projects, run into delays or cost more than they expected?
Right.
Those finance costs, they could become a real problem.
It's a good reminder that, growing really fast, it always comes with risks.
Absolutely.
It's like walking a tightrope. Exciting, but, you could fall.
Exactly. And there's something else to think about too, The real estate market, it's cyclical.
What does that mean?
It means, it goes up, it goes down. It's not always stable. So even though things are looking good for real estate in India right now, that could change pretty quickly if, fewer people want to buy homes or if there are too many houses on the market. National Standard could see their sales drop. The revenue could go down.
So they need to be ready for anything, right?
Yeah, they got to be able to adapt.
To be flexible, not just, ride the wave when it's good, but also know how to, navigate those changes.
Exactly. And that's where, the management team, they really have to step up. They have to make smart decisions. They have to see those changes coming, and they have to be able to execute their plans, even when things get tough.
Right, right. And we were talking before about them delisting from the Calcutta Stock Exchange.
Yeah.
They're still on the Bombay Stock Exchange, but could that delisting still cause any problems?
Hmm. Probably not any major problems, but, it could mean that some investors, those who mostly trade on the Calcutta Stock Exchange, they might not be able to invest in National Standard anymore.
Right.
And it might be a little bit harder for new shareholders to buy their stock.
Yeah.
It's not a huge deal, but it's something to keep in mind.
Okay, so we've talked about some of the downsides, the risks. What about the good stuff? What opportunities are out there for them?
Well, that merger with Macrotech Developers Limited, that could be a game changer. It's a chance for them to combine their strengths, make things more efficient, and get access to more resources and expertise.
Yeah.
Together, they could become like a real powerhouse in the real estate market.
It's like they're putting together like a super team, right?
Yeah, bringing the best of both worlds together.
To achieve something even bigger, what other opportunities are out there for them?
Well, we were talking about all those big changes happening in India's real estate sector, right?
Right, with the urbanization and the government wanting more affordable housing.
Exactly. And those trends, those are huge opportunities for National Standard. If they can position themselves the right way, if they can appeal to those growing markets, they could see a big jump in demand for their projects.
So it's about like giving people what they want, what
Exactly.
they need.
Meeting those needs.
It's not just about building houses, it's about building, homes that people really want, homes that, reflect what India is becoming.
And it's not just about, following the trends.
Right.
National Standard, they could be innovators. They could really shake things up in the real estate sector.
How so?
Well, imagine if they, started using sustainable building practices, or if they integrated all the latest smart home technology, or if they focused on creating these really community-oriented projects.
Wow.
If they really pushed the boundaries and offered something unique, they could attract a whole new group of buyers. And they would really solidify their reputation as, as leaders, as forward thinkers.
Yeah, it's about shaping the future of real estate, not just, going with the flow.
Yeah.
So we've looked at a lot of different aspects of National Standard, from their financials to their strategic decisions. But, one of your original questions was, what's the overall outlook for the rest of FY25? And, we don't have those specific forecasts from the company.
Yeah, that's right.
So what do you think?
Well, based on everything we've seen, I'd say it's reasonable to be, cautiously optimistic.
Okay.
Their Q3 performance was strong, and that merger, it could be really beneficial. But, those risks we talked about, those are still out there.
Right.
So the key for National Standard is going to be finding that balance, being ambitious, but also being careful.
It's a good reminder that in finance, there are no guarantees.
That's right.
You have to look at all the information, weigh the pros and cons, and then make a decision.
Absolutely. And that's what we've tried to do in this deep dive. We've given you, the listener, all the knowledge and insights you need to, really understand National Standard and follow their journey. It's going to be exciting to see what happens next.
The future is full of possibilities, and that's what makes all this so interesting. Thank you for joining us for this deep dive into National Standard India Limited. We hope you learned something. And, keep doing your research, stay informed, and as always, send us more sources. We'd love to do more of these deep dives. Until next time.